Hello to all you future homeowners out there. Today I really want to give a shout out to all of you mothers. I know there are so many mothers that I have been coming in contact with, and I get so excited, whether it's a family or just a single mother, to assist you guys, especially if you are a first-time home buyer or a first-generation home buyer. Congratulations, kudos to you. I remember when I was first getting married to my husband, and we decided we were moving into this apartment. And after we started having our children, I remember the feeling of really wanting a safe place to raise them where they could be stable and, have their own little desk to do their homework at, and their own rooms, and, just their own space, and how important that was, their own yard to run around in. So I absolutely get it, because I have been there, and it is so exciting, because you are just not changing your life when you are going in and purchasing a home as a mom or as a family unit. You are not just changing your life, you are changing the entire trajectory of your family. So, for example, it was certain times in history where people were not allowed to be homeowners in America. And now that they are, home ownership has been a tool in order for people to be able to pass along an inheritance. So the home that you are buying, yes, you're offering stability and someplace for the kids to be able to grow up and to stay, and a nice community and neighborhood, and you might even like the school district, and all of those things are great. But you're also creating an inheritance for them, so that they will have something that you can actually pass down to them, that you can leave behind on this earth when you are no longer here. So congratulations on that. Just wanted to let you know that there are so many different options out there for you to become a homeowner. An FHA mortgage is a really good option. That allowed me to become a homeowner with the very first home that I purchased. It's a 3.5% down loan as far as the down payment goes. And then, if you were short on cash, which I know that we were at that time. So what we did was we went in and negotiated with the seller to be able to pay our closing costs, which reduced the amount that we had to come out of pocket for. So FHA right now, the interest rates, I've been seeing them come out about 2.75, 2.875. It is such a good time as far as interest rates goes, if you still have stability in your job. I would not promote right now for anybody to go out who has been laid off, who their job is just not showing that it has enough money to keep them on, because you are making a long-term commitment. And it's important that once you get in your home, that you want to keep your home. You don't want to have to go through that whole foreclosure drama. So, we want to make sure that everything is set up so that you can be in a good position. So many people were affected by, COVID-19 and the coronavirus, the whole pandemic. And we just want to make sure that as you're moving forward and you're making a decision to buy a home, if you're not in a position where you are stable right now, then you shouldn't be looking at that. But if you are, and you've been seeing growth in your field of work, and you have been very, very stable, and you have the opportunity right now to take advantage of what's happening in the market as far as the interest rates, that is an excellent opportunity. Because I remember when interest rates, 5-6 years ago, they were saying, oh, well, they're at 5%, and that's really good. Then they started moving down into the 4s and then the 3s, but now they're in the 2s. I mean, that is really, really excellent. And it may be an opportunity that we may not ever, see again in our lifetime. Who knows? So just want to throw that out there and to give you your kudos for moving forward and looking to become a homeowner, wanted to also tell you about a couple other programs that are out there. So we have some 100% financing programs. If you are a veteran, the VA loans are excellent to move forward. And you could do that same concept where you go in and you have the 100% financing, and then you ask the seller to pay your closing costs. And then I have seen veterans who come to the closing table and pay absolutely nothing out of pocket to purchase their very first home. USDA is another excellent program, 100% financing. And I want you to know that there are two different types of USDA loans that I'm seeing right now. It's all USDA and coming from the same place, but there is USDA that you're getting from your lender, which is actually a third party, and then there is USDA Direct, where you can actually go directly to USDA. Now there's a huge difference in this, because you can get a good deal with the USDA loan. It's already a great deal because it's 100% financing. But if you qualify for USDA Direct, because there are income limits, if you qualify, they have grant subsidies in which your monthly payment can actually be lowered by these grants that they have through USDA. They also have different terms that they can be more flexible with, as far as the amount of time that they are able to allow you to pay back your mortgage loan if you needed extended terms or anything like that. They're just a little bit more flexible when you're able to go directly to USDA, because they don't have the overlays that some of the other lenders may have. So what an overlay is USDA will have their standards of what they will accept, and a lender will put extra requirements on top of what those standards are, because now they're saying this is the standards that they're willing to accept as far as their lending institution would go. And that happens so often because when you're dealing with the lenders, they have like a certain threshold for risk that they're willing to take and that their investors are willing to take. And so they put those overlays on top. That's why when you go to certain lenders, you'll see like one lender will say, well, I'll go down to a 680 credit score, and another lender will say, no, it has to be a minimum of 620. Well, that's because they have overlays on top of those lending programs. But back to USDA Direct, it is an excellent program. Now, when you are doing USDA Direct, you got to keep in mind that you can only purchase homes that are available for the program. So everything's not available. If you're in the Grand Strand area, like Myrtle Beach is not available for the properties. Surfside Beach, Merle's Inlet areas, we're looking for rural areas when we're looking at USDA loans. So Conway, Loris, Aner, Longs, those areas will be available for USDA loans. And if you want more information on what is available for USDA, feel free to give me a call. I'll be happy to help you with that. Some other things that I want to put out there is, with all of these that I'm talking about, all of these different loan programs, you can still do the exact same thing and negotiate your closing costs to be paid for by the seller. And how that works is, ultimately, if you have $190,000 purchase price and you ask the seller to give you $5,000 at closing for your closing costs, seller paid closing costs, then that would come to you as a credit at closing, and it could be used to pay your attorney's fees, any escrows that you have to pay up front, for your insurance, your title insurance. So it could be used for everything that's associated with closing on that home. And same thing with USDA as with VA. You can come and be absolutely zero out of pocket. Another great program that could work like that in your favor is also going to be SC Housing. You have to kind of catch SC Housing when they have funds available. The same thing for USDA Direct. When they have funds available, then you can go ahead, and it's an excellent program. They have their own requirements. You can purchase a house for no money out of pocket. I hope that some of these tips kind of helped you, because it's difficult when you are, I know at least it was for me, when you're looking to purchase a house and you have kids and you're running the household and you're trying to save and put aside, these large sums of money. For me, I would much rather keep my money in the bank, in the savings account for a rainy day in case something ever happened that I needed it, and then go into a property with less money out of pocket. And if you go the USDA direct route, you're also going to get such a great monthly mortgage payment that's going to be so affordable for you, and it is so worth it. Another thing that I love about USDA Direct is they do all of their paperwork up front. Not all lenders are going to do that. By the time you get to their approval, you have already gone through verification of employment. You've already submitted all of your documentation for verifying. I mean, they have everything. You are just going to look for a property that meets their requirements. With USDA and FHA, they don't really want you to be getting extreme fixer-upper properties. They just don't. So we have to have a property that may need some updating. That's okay, as long as it's structurally sound and it's a safe property. But just keep that in mind as you are moving forward. And I hope that all of this helped you. Please let me know down in the comments section what you guys want to know more about, what you want to learn more about. I want to be a resource for you, and I am an open book. I am here to let you know whatever you want to know about purchasing a home so that you can make educated decisions in the home buying process. Until next time, guys, happy house hunting, and I look forward to talking with you soon.